Markets. My name is Jeffrey Dunning. I'm the host of the show, Moving Markets, also the owner and founder of Safe Option Strategies. Today's podcast episode is brought to you by Safe Option Strategies. Check us out at sostrades.com, learn a little bit more about what we teach and how we help people be protected in the markets and still have a great opportunity to profit and see returns most of the time far better than the index averages. So check us out at sostrades.com. Four things I want to talk about today. Let me start. I'm going to get into the economic calendar for this coming week, talk a little bit about some of the things we have going on this week, and talk more about the upcoming week than about last week. Last week, the Dow Jones Industrial Average, the S&P, had a big rebound from the first losing week they'd had in 6 or 7 weeks. And it's weird. I'm still of the opinion that this market is not behaving rationally, that if you look at the news, if you look at the economy overall, it's like if you look at the underlying fundamentals of the economy, it's hard to imagine this market keeps going up the way it does. But there's some FOMO at play. There's some other things going on. People just keep pushing stock prices higher, and certainly we're benefiting from it. And I'm certainly not complaining that the markets are going up. It just continues to surprise me. The odds continue to defy a little bit. I mentioned to some of the members of Safe Option Strategies on the live presentation we do every morning when the markets are open that it feels like we're in a prolonged version of buy the rumor, sell the news. Powell keeps raising interest rates. The inflation is ticking down, but at a really, really slow pace. And it's really not ticking down. It's actually slowing down. The rate of inflation is slowing down, but at a very moderate pace. And there's still a long ways to go to get to the 2% that Jerome Powell feels we need to get to. So I think more interest rates hikes are on the horizon. I'll talk about that in a minute. But oftentimes when there's a big event of some type coming up, the market tends to buy into that event. And then even if the news that comes out is what was expected and it's good news, you sell the news. You kind of buy into you rally into the rumor, and then when you get the actual news that the rumor was suggesting would happen, you sell off. And this is a phrase that's been used in the markets for years, probably decades. This feels like a prolonged version of that. It's like for a year and a half now, or for a full year, Powell has been raising interest rates, and yet the markets continue to go up for the most part. And I think once he actually says we're done raising rates, you might see a little bit of a break from what's happening and the reverse of what you think should happen, and a sell-off instead of a continued buy. It's like everybody's bought into the expectation that he's going to pause or maybe even reverse and lower rates. I still think that's a pipe dream to happen before the end of this year, but you never know. It could happen. And I think when that reality sets in and he says, okay, we're done now for the rest of the year, people are going to go, and then realize they've already bought into positions and the markets aren't technically capable of going a lot higher. And I think you might see some sell-off that comes as a result of that. But look, the reality is I keep thinking the market's going to sell off. I keep being wrong on that. Making good money in the trades because we've stayed very, very non-directional in our trade. We've used a lot of long iron condors, a lot of double diagonals, a lot of trades that profit regardless of what direction a stock moves or regardless of what direction the indexes move. And that's been very profitable for us. Our members of the Safe Option Strategies program that follow all the trades we send out each week are up over 80% on the year. The NASDAQ is having a phenomenal year, up almost 34%, a little over halfway into the year. And we are easily a little more than double that on our returns right now. So we're making money in this market, but it just doesn't seem like it's doing what it should be doing. And I continue to be wrong on my predictions of what it will do. So we'll see what happens. All right, that's not what I was going to start with. I'm going to get into, like I said, the economic calendar. But I wanted to start out last week in the episode. Talked a little bit about Bidenomics, and I got on a soapbox and told you what Bidenomics is in my viewpoint. I got some good comments that came in on YouTube, and I appreciate the people that are listening and commenting on that. Make sure you subscribe to the program. We'll try and drop a new podcast every single week, and we might even pre-record some for some weeks that I'm going to be on vacation and do some other things. But tune in and listen to what we have to say and give us some feedback and give us some commentary on what you think can make the program a little bit better. Be nice about it. We're civil here. I have strong opinions on the markets and sometimes on politics, but I try and keep it civil. Okay, so I talked about Bidenomics last week. Got on a little bit of soapbox about how ridiculous it is that he's trying to pitch economic success when in reality everything the man touches just turns to crap. And you don't have to. You can be a fan of his and actually like some of his socialist, borderline communist politics, but you cannot deny that whatever the man touches just turns to absolute garbage, and there's no exceptions to that. Through his whole political career, not just as president, it's his entire political career. One of Obama's former advisors, it might have been Axelrod, it might have been somebody else, said about Joe Biden that he's been on the wrong side of every major political decision that he's voted for since his time in the Senate. The man's been in Washington, D.C. for 50 years. And I think he didn't go in until he was 75. That makes him 125 years old, or at least he acts like he's that age. But anyway, Bidenomics is synonymous with a failing economy and a crappy economy. What I really found funny this last week was the White House and the Biden surrogates going out and trying to pitch Bidenomics and trying to make a case for how great it is. And one of the things that Biden keeps saying is he keeps taking credit for the biggest ever deficit reduction, $1.7 trillion in deficit reduction, which is a complete load of garbage. Even the very super ultra liberal Washington Post gave that bottomless Pinocchios. That's how big a lie that is. But they try and spin it in a way that they claim they're not lying about it, and it's all just completely ridiculous. The congressional, I think it's the Congressional Budget Office, or the Office of Budget Management, one of those, a nonpartisan, if there's such a thing, I highly doubt it, but a nonpartisan government agency that rates things economically and just tries to give you the nuts and bolts of what's going on with budgets and deficits, said that Biden is on pace for $2 trillion in deficit spending with the bills that he's passed and some of the proposals and some of the executive orders and regulations and so forth. So even if you could make a case that he somehow shaved 1.7 trillion off the deficit, which I think is complete and total BS. Even if you could make that claim, and for those of you that may not know, I think most people that are probably listening to me know this. For those of you that may not know, they get to that claim based on some COVID emergency spending that went away and was scheduled to go away. So when he says he reduced the deficit by that much, he didn't do a damn thing. He didn't do anything to reduce the deficit. He allowed some excessive spending that was, we could debate whether it was necessary or not, but a lot of people thought it was necessary, and we spent it at the end of Trump's time in office, and it was to try and save the country financially and economically. And when all that excessive overspending went away, Biden wants to call that a deficit reduction. So it's nonsense. But even if he could somehow justify, and I know he does in his feeble mind, but even if he could justify credit for that 1.7 trillion, he's on pace to do 2 trillion of deficit spending in the near future. And so it just blows out of the water that he's making any progress. It's like, you can brag all you want about scoring 10 runs in a baseball game, but if the opponent scores 13 runs, you lost the freaking game. And so, even if Biden can get away with the 1.7 trillion claim, which is I'll stop saying it. This is just a flat out lie. 2 trillion in deficit spending is ridiculous. So let's hear it for Bidenomics. Go Bidenomics. All right, so let's talk a little bit about the economic calendar this week. I'm going to pull it up on the screen that's right in front of me so I get this correct. So tomorrow we're going to get retail sales numbers. There's a lot of times when these retail sales numbers may not have the impact that they could have this week. When you've got a week where CPI numbers are coming out, or the Fed's going to make an announcement, or something else is going to happen that is a definite market move, or retail sales can still have an effect on a sector. Companies like Target and Walmart and Costco, places like that, can certainly be impacted by it. Some really good numbers shows a strong consumer, and that bolsters all these companies. Some really bad numbers could show some weakness in the consumer, and that could be bad for all these companies. This week it could have a little bigger impact, but that's because of the absence of a lot of other news. Now, that report's coming out tomorrow morning before the market opens. On Wednesday, there is a whole slew of housing data that's coming out. I guess not a whole slew. Housing starts and permits and mortgage applications come out on Wednesday. Then on Thursday, existing home sales. And tomorrow, there is a housing market index. I don't know that a lot of people are going to pay attention to the index in the wake of the retail sales report that'll come out about an hour and a half before that. But the existing home sales on Thursday, the mortgages, housing starts and permits, those are going to be a pretty big deal, because there are people now predicting that the housing market has kind of seen the peak of its bubble, and that it's due and set to come back. And so, I think you'll get retail sales will kind of dominate what goes on tomorrow. And then Wednesday and Thursday, I think are going to be much more dominated by what's going on in the housing market. But even with that going on, it's kind of a light week on economic news. Next week's going to be the big week. Next week, we're getting that next FOMC meeting, that next Fed rate decision. Powell was pretty clear a couple of meetings ago that there were going to be at least 2 more rate hikes, and a lot of people think that accurately predicted that there would be a pause when they met last month, and that at the end of this month there will be an increase, probably 25 basis points. There could be a second month in a row of pause, and if there is, I think you'll see this market continue to rally pretty big. If there's not, I don't think there's going to be a big, huge sell-off. If Powell announces after a rate increase that there might be more than one additional one before the end of the year, that could rock the markets and send things in at least a temporary tailspin and send it to the downside. So a lot could happen. A lot will probably happen next week. And the markets today, I believe all 3 major indexes finished to the upside today. I wasn't glued to the market when it was closing up today, but Dow Jones finished 76 points to the upside, the S&P 17, and the NASDAQ had almost a % increase, 131 points to the upside. A few notable things that did take place today. Apple got a nice upgrade from, I believe it was Morgan Stanley. And Apple doesn't report their earnings until the first week of August. I think there's a good chance Apple rallies for the next couple of weeks. If you're into spread trades like bull put spreads, in the money bull call spreads, shorter term simple bull call spreads, maybe out of the money bull call spreads, or just buying some long options, just some strategically placed long options, I think Apple's a good bet for the next couple of weeks. I think it's likely that it rallies into their earnings report, and we'll see what gets reported the first week of August. But Apple could have some nice move to the upside over these next week and a half, 2 weeks, as it moves closer towards its earnings report, and I think that'd be kind of fun to watch. Apple was up $3.30 today, almost 1.75%. Tesla had a big move up today. They 3.2% to the upside, $9 to the upside. Tesla reports on Wednesday. The announcement of the first Cybertruck after the Cybertruck was announced in 2019. The first one actually rolled off the assembly line today in Austin, Texas. And that was a big deal, and it had a big enough impact that it caused Ford Motors to announce that they're going to slash the prices of their electric truck, which tells you that Ford's a little bit concerned. That Cybertruck, I like a lot. Teslas are nice cars. I don't know if you've ever driven one or you own one, you've ridden in one. They are nice cars, plain and simple. That Cybertruck has got to be one of the one of the ugliest looking things I have ever seen in my entire life. I think some of what it's going to have in it are really cool. I think there's some, it's probably going to be a fun vehicle to drive, but man alive, that thing is, I don't know. That's just an ugly, ugly truck. The Rivian has it beat 1,000 ways till Sunday in terms of just the curb appeal to it. But I'll admit freely, I'm anxious to ride in one and see what one looks like. I think that'll be fun. But Tesla's going to report after the market closes on Wednesday, and you never know. You never know with Tesla. They tend to just keep on beating what people expect them to do, whether it's with the number of cars produced or the sales or whatever the case may be. Netflix is going to also report after the market closes on Wednesday. That's a big one that I'm very interested in. I opened up a double diagonal spread on Netflix today with August 18th expiration on the long options and July 28th expiration on the short legs of the option. If you don't know what a double diagonal is, check us out at SOS Trades, safeoptionstrategies.com or sostrades.com. But anyways, there's a couple of fun little things that we're doing as a company going into the rest of this earnings season. I'm going to wrap up right there. Everybody have a great week. Thank you for listening and tuning into the podcast. Make sure you tell others about it. Make sure you like us and subscribe. And we'll keep bringing you some fun stuff each week. And in the meantime, have a great week. Bye-bye.